Welcome to StockInvest.us, a world of trading ideas. We remind you that trading involves a high risk of losing money and that you should speak with a financial advisor before buying or selling any securities. By using the information you agree and are held liable for your own investment decisions.
Hi and welcome to StockInvest.us podcast for week 27. It's your usual host, Jim. But this time, I'm in Vilnius after spending 3 weeks in Norway. Outside the weather is really good, it's almost 30 degrees. But we are not here to talk about the weather, we are here to talk about the stock markets. Every week for more than 70 weeks in a row, I've been giving you my advices, my beliefs, my predictions about how the stock market will move the week ahead of us, and analyzing some of the major stocks. And for many weeks I've been telling you that I believe Nasdaq will have a final rally if it just managed to pass 14,300 points. And Nasdaq have. It's already 14,600 and it's really boiling upwards. I believe that it for sure will hit 15,000, and as I said last podcast and even podcast before that, it may very well go to 18,000, 20,000 in the last frantic rally. Last week, we saw a shift. We saw that in the white picture, several stocks fell, while the major tech stock gained back momentum. I told you last week also that if Apple managed to break above 135, you should see a very rapid movement up to minimum 140. And Apple ended at 140. I was expecting a little bit different development where the big tech stocks would go more sideways and the wider range of tickets would go upwards, but it was a little different last week. But NIO was moving very good. NIO is already above $50 and NIO in the portfolio is doing very well. The rest of the portfolio, which we'll be mentioning at the end of this podcast, was having a somewhat neutral week. It was up just under 2.8%. So it was not the very best week. It was driven by NIO, of course, doing very good, but some of the other stocks were not doing that well. But I believe the portfolio will just continue to push upwards, and I believe the market will continue as well. We'll try to make this a summer edition of the podcast, trying not to be as long as I usually. Usually I talk for 40 minutes because there is so much to tell you, but I will try to be a bit shorter this time. So how did Nasdaq do? Well, Nasdaq started last week at 14,360 points, ending at 14,639, being up almost 2%, 1.94%. And everything in the chart indicates that it will just continue to push upwards. Dow Jones did 1%, ending at 34,786. Oil, which I told you a long time ago, it's just B and oil stocks. One of my portfolios are oil related, and that one is just doing great. Oil is $75 as we speak, up $1 from last week. I think right now the oil is a little bit high. I believe it should go down to the 60 level, but as I always said, I think there will be a rally where oil will be upwards to $100. I think it will be in conjunction with a conflict. I always believe that conflict to be involving Iran. If it will happen, I hope it will not be a conflict anywhere at all. But if we will see this conflict, I believe we will see oil above 100. But in general, I think oil is high as it is, and that the $60 level is more reasonable. You will see sooner or later that OPEC and other oil production countries will start to increase their production, because right now they are really cashing in. And greed works that way. You just want more to sell while there is still high prices. And I believe that eventually oil will start to flood more into the market, and the demand will be met, causing the prices to go down a little bit from today's level. Gold is again pushing upwards. It's just below 1,800 at $1,793. I believe gold will get back to 2,000. It's just a matter of time. I believe gold is a very good place to be because I believe that you will see interest rates and all these things start to increase. While speaking about the interest rate, the 10-year Treasury yield, which we follow, actually fell a little last week, and it's 143 as we speak. That is one of the reasons why I think stock market will continue to push upwards. And as I said last week, I've seen this many times before. There is a missing logic between what is actually happening, where we see increases prices everywhere. Inflation is really coming. And you will see this very soon, where mobile phones, computer equipments, everything will start to explode. The prices will start to explode upwards, simply because there's a shortage of raw material, there's a shortage of ships. While there was COVID, we had big delays in things like containers. Containers were stuck in Asia, so there was a disruption of logistics where containers still are stuck. They are not distributed properly around the world, and you get delays simply because of containers. In addition, there has been less production of minerals, and as everyone was sitting home, they increased, upgraded computers, upgraded telephones, upgraded everything, causing huge demand for IT-related and earth minerals. And the lack of earth minerals is causing delay in ship productions, etc., etc. And these things will just spin off. House prices is going way too fast, etc., etc. And this is inevitable. In addition, we know that several banks, especially in the United States, are continuing to printing money, pushing money into the market. This money will flow to the stock market, and that is why, as I said, I believe we are onto a very nice rally as is. Now we will see results from June tick in, the unemployment rates, everything from June will soon come by the end of this week. But in general, it's a shortened trading week in the United States. But in general, I don't expect too much from the week ahead of us. I see several of the major tech stocks are overbought, and this can cause markets to slow down a little bit. Could be that after several green weeks that we will head into the first red week, but I don't expect it to be very red. And that brings us straight to the stocks. As usual, we will do a few of the major tech stocks, but this time I will skip Amazon and put in GameStop instead, since it's a more popular stock. If you have a wish, if there is a stock you want me to analyze, of course I can do that, or any topic you want me just to shortly discuss in this podcast, just send me an email, jim@StockInvest.us, and I might just bring you all your question into the podcast. Before jumping to the stocks, I almost forgot. Let's quickly look at the signals around the world. Analyzing more than 34,000 tickers, we can give a buy, sell, or hold signal. And right now, across all world, we see 29%. Buy signal is neither too high, neither too low. It's okay. Nasdaq only 26. That is simply because a lot of stocks fell, while the major tech stocks went up. 26 is actually very low, and we can expect things to move upwards. So it's also a good position from that point of view. Nasdaq 35% buy signals, London 32, Frankfurt 30, Tokyo 32, Shenzhen 28. So I don't see any dramatic things. We see some more sell signals, but it's just natural. What can be is, of course, that these will continue to push a little bit more down before they go up. The scary situation is when the markets are already very high and there is too much buy signals and we get an overheated market. But let's jump straight into the first stock. Apple, I told you last week that I believed it would be a sideways movement, but be prepared. If it went above 135, it should move straight up to 140 and maybe even 150. Apple managed to break 135, went straight up to 140, actually 139.96 if you want to be accurate. I had a target of 132, so I was a bit wrong, but as I told you, if that condition happens, be prepared, it will move fast. I said the same thing for the rest of the tech stocks, that if they break a certain level. And since I like to teach you a little bit, let me just put in a quick lesson: support, resistance. You will find at our webpage, and you will even find at our YouTube channel, StockInvest.us, you will find some videos where I talk a little bit about accumulated volume. Accumulated volume works very nicely. It's just how many shares were bought and sold at different levels. And as I told you, there was last year there was a resistance at 135, meaning that there was just a lot of stocks bought at $135. At that point, Apple was below 135, and as I said, as it moved upwards, it will face this resistance between 134 and 135. Simply people just waiting. They have been in losses so far, just waiting to sell their shares. This is support and resistance based on accumulated volume. You can also use different other things like round numbers, moving averages. There are several things, but personally, I really love accumulated volume. I think it's the best one to describe support resistance. And we always see this: when a resistance level is broken, you can expect fast movements, especially if there is little resistance above that level. Same thing about support, and this is the huge lesson. If you learn anything from me, watch your support levels, because if a stock falls below a support level or have very little support below, the risk increases and you can get stuck in a stock which falls very fast, very hard, simply because there is no support. Or at our webpage, StockInvest.us, look at our charts. You will see at the right hand, you will see some gray bars in the chart, and that is the accumulated volume. Easy, intuitive, you will understand what I mean. Just check the chart and learn about support resistance. That will save you a lot of cash and even increase your trading skills, because you want to get positioned where there is little resistance above. Right now, talking about Apple. Well, Apple doesn't have any resistance above, so it can just continue straight up to 150, even 160. There is nothing that can stop the stock when it first is overbought. So what I usually do, I look at previous history, looking at what happened last time the stock was overbought. How long did it manage to stay overbought before taking a natural correction? And the last time the stock was overbought, it was overbought for about 1 week, and then it fell back. Now it's been 3-4 days overbought, meaning that it still can push higher. There will be a correction, but the volume is following the stock. It's a very nice condition. And as we broke 135 up, that is flipped from being resistance to support level. So it means that if the stock falls down, it will find first support. There is some support around 137. Later, big support between 135, all the way down to 130. So I don't manage to see anything really bad happen right now. Could be a natural reaction, starting the week with a natural reaction, going down a little bit before pushing upwards. To me, it looks like the first part of the week will be where it continues a little upwards, could be upwards to 145 before taking a natural reaction downwards. But if we look more than just 1 week ahead, we look a little bit longer, maybe 2, 3, 4 weeks, it's really nice position to be now. And I especially like all the support below, because that reduces the risk. We will head into a correction, no doubt about that, but it's not there yet. For the week as such, I believe that the lowest we will see Apple, unless something very, very special happen, is 134, while upside could be 150. I believe it will move somewhere between these levels, but by the end of the week, maybe have a slight correction. I don't manage to see Apple be a GameStop stock where it moves insanely much more. Because it's not the nature of the stock. So I believe that this week we will have that more sideways movement, which I was describing last week. By the end of the week, I don't manage to see Apple much higher than it is today. So I will keep a target of 140, but during the week, it should push higher. Of course, I can mention buy signals from short-term moving average, long-term moving average, from the relation between these two averages. The volume is following the stock, so everything just looks great, except being, as I said, overbought. You will see this in the chart. We marked the price line red when it's overbought. Just look at the history, make your own assumptions, and you will probably end up with the same conclusion as me, that it might have a natural correction downwards before continuing upwards. The other stock which we also look at is Microsoft, and Microsoft had a very nice week last week. Same thing as Apple. And as I said with Microsoft, if it managed to break that resistance level, it will just push high. Last week I told you that I believe Microsoft most likely were to go sideways, but if breaking up, it could go as fast as go as high as 280, ending the week at 277. So good week also for Microsoft. I will not repeat so much because it will be the exact same analysis as Apple, and these two companies are somewhat the same. It's currently very overbought. That will be a natural reaction down. When it happens, it will find support at 270, later at 263 to 255. Very good support levels, and I don't manage to see it fall lower than 255. Has to be some very bad news for that to happen. I don't manage to see it run very much upwards. I think if, as I said in Apple, if we look a few weeks, I think it will be higher, but for the week as such, I think it will do somewhat the same like Apple. It might go up on tomorrow's trade and then go sideways or fall a little for the next 3 days, or if it starts with a little fall, then go a little up. Hard to say. By the end of the week, I don't manage to see Microsoft higher than today at 277. I think actually we will see Microsoft somewhere around 273. Same like in Apple, buy signals from the moving average, short-term, long-term. The relation between these two also have buy signals. And if you go to our web page, you look at our charts and you start to learn these things about crosses, moving crosses, where the long-term goes below the short-term or opposite. You will have what is called a cross. And you will see in the chart, you will see a green, we mark it with a star, but it's actually a cross. A green buy signals, and go a little back and you will see the red when it was a sell signal. So it's a huge buy signals. The one signal that is above this signal, because this is a very nice signal, the one that is even above this is of course our own special golden star signal. It has a little bit more conditions to be found. It's a very rare signal, but crosses is one of the most used long-term signals, and there is, as I said, a buy signal between the relation of the short and the long-term moving average in both Apple and Microsoft. And that brings us to Tesla. It's a little bit more interesting because it's a lot harder stock to predict than these other two. So mainly it's about getting the direction correct. And as I said last week, I believe that Tesla will continue upwards, might have a slight reaction downwards before continue upwards. I put the target last week at $710, ending the week at 678.9. So I was some $10 off target, but I still find that okay. It's Tesla we are talking about. The thing is that I told you when it was 560, now it's time to buy Tesla because it most likely will go upwards. The first target was 660, which it broke. And then I moved target a little bit up, and I will continue to move my target up. If we look at the chart, we can see the stock is a little high on the relative strength index. There are very much signs saying that the stock should have a slight correction downwards. There is even divergence in the volume, where the volume is going up, but the stock is going sideways. Usually that is an indication that we can expect further fall. There is a sell signal from the short-term moving average, but the long buy signal from the long-term moving average. The cross, which I mentioned just a few minutes ago, is a buy signal, the relation between the long and the short term, where the short term is above the long-term moving average. Several positive signs, but the high relative strength index together with the stock being in the top of the trend, of a falling trend actually, indicates that the stock should push a little downwards before going upwards. But I've seen these things before, where you can be a little fooled, and then I use a different technique. I look at general trends. I shorten the trend a little bit. I look at the volume formations, and the volume doesn't scare me so much. I believe that Tesla might go down to 660, but then it will push upwards, and that it will continue to push upwards to the 780 level actually. Not this week. Has to be something very good, but that we will see Tesla push upwards. I will keep my last week's target for 710. I think that 710, 720 should be reachable for the stock. As I said, could fall down to 660, then start to push upwards. Have to remember, as I said about support resistance, below 660 there is no support at all before 630. So falling below 660, you can expect in just an hour, maybe even just 5 minutes, to fall down to 630, but at 620 very much support, and I don't manage to see fall any lower than that. In general, I think that we again are heading for interesting times for the Tesla price, that we will see more volatility after the stock being somewhat, I would say, somewhat dead for some weeks. So we will keep 710 target for Tesla. Have to remember also, if you follow me, you will know that when it was 900, I said that you can expect correction downwards. So it's about trying to catch the trend. That brings us to GameStop Corporation, and is one of these meme stocks. Looking at the stock, go to our webpage, type in GameStop or the ticker GME, and you will get the same chart which I'm looking at now. What you will see is that the relative strength index is low. It was actually oversold at 23, found a new bottom at 33. It has a sell signals from short-term moving average, sell signals from the long-term moving, even a sell signals from the relation between these two signals. And this is the thing, we have to look at history. What happened when the relative strength index was low last time? Some stocks, they just push straight up after being oversold, while some stocks move sideways before they go up. Last time the stock was this low on the relative strength index was back in April 25 about, and the stock just moved sideways between $140 and $180 until it catched on fire by the end of June with a rapid movement. I think we will see somewhat the same, stock just being slow and boring, moving sideways anywhere between $190 and $220. I don't manage to see anything really exciting happening this week. What I do like is the volume is very low, meaning that if the volume starts to push upward, you can expect the stock to push upward. The stock usually follows the volume very nice. So that will be the trigger that you will be looking for. Keep an eye on the volume. If you wonder how you can do that, well, you can look at our page at Finance Yahoo, whatever, and you will see what is daily average volume, and just look at the volume as the trading is going. Is it moving upwards or not? On Friday, 3 million shares were sold. So that's for Friday. Will Tuesday, Wednesday, will this week be 5, 6, 7, 8 million? That indicate that the volume is pushing upwards. That's one trigger that you want, because looking at the chart, I can tell you that this stock most likely will push upwards, but I don't think it will happen this week. I think it's a bigger chance that the stock either will be at the exact same price or lower than today. My best guess for the week as such, ending on Friday, is that we will see GameStop at $185. So that will be the target for this week. I don't manage to see, as I said, anything fancy happen right now. Support levels, 185 all the way down to 140. Above There is resistance at 210, 220, 240, 260, 280, and 300. So there is $20 between the levels. These are trading levels which you can follow. If the stocks start to move upwards, you can expect it maybe to turn around 220, maybe turn around 240, 260, bounce downwards to the support level, which will be then $20 below, and that will be how you day trade the stock if you are into day trading. If you're looking for the big score, as I said, there is no indication that there will be anything. Of course, news will change anything, and you never know about these stocks, but the volume will tell the tale. So keep an eye on the volume. If it starts increasing, well, that will be a buy signal, because every time the volume has been going up in this stock, the stock usually, in most cases, I would say maybe 85 to 90% of the cases, the stock move upwards. So it's a good signal to follow. Heading into Bitcoin and DogeCoin, which is even harder. And what happened about crypto? Well, I said a long time ago, I believe Bitcoin will go all the way up to 70,000. It went from 20 to 65, 67, depending what timeline you look at, intraday or end day. But end day it was 65 or 67,000. Then it did not manage to get the momentum to keep upwards, and as I told you, I expected a fall. I expected the stock to fall as low as $25,000. That was back in week 23 when I said that I believe it will go down to $25,000. After week 23, week 24, 25, 26, and even this week, I said I believe that crypto will go upwards again. Bitcoin don't manage to move very fast. It's stuck a little in that level, in that bottom level. I said last week I believe Bitcoin might push upwards to 42,000, but on Friday it ended at 34,000. So I was again off, but it's showing every sign that it will push upwards. And so I was wrong on the exact price, but again I will be positive about the direction, and I think that the risk is less. And if we look right now, not at Friday, right now, the Bitcoin is traded higher than 35,000. Looking at the chart, we can see that the relative strength index is moving upwards. There's a buy signal from the short-term moving average, and I think even today or tomorrow there will be a buy signal from the long-term moving average, indicating what I believe, that now Bitcoin will start to move upwards again. So I will maybe not be as bold as last week, be a bit more optimistic, less optimistic. So let's just say that by Friday we will see Bitcoin at 40,000. But in general, this is what I believe, that the crypto will move upwards, and it's a good time to get in. I have to advise you that I personally also bought when Bitcoin fell below 30,000. I started to get a few XRP, some Dogecoin and some Bitcoin, of course, because I thought it was a good opportunity. After selling out on higher levels, I believe that we will see crypto again manage to get traction. The last crypto will be Dogecoin, and if we look at Dogecoin, it did not perform as good as I was hoping last week, moving a bit more sideways. But excuse me, this is a small crypto which highly driven by Elon Musk, of course. Whatever he says, he posts a picture of a dog and everyone buys Dogecoin. But I believe Dogecoin will do good. There was this sell signal from the relation between these two averages, this cross which I mentioned, is between the two moving averages, was given back in end of May. But I see signs if Dogecoin will just go a little bit up, there will be a buy signals from the same cross. So we'll flip from sell to buy signal, being a stronger signal. For that to happen, we need to see Dogecoin above $30. And last week I was way too optimistic, saying that I believed Dogecoin will go up all the way to 38 cents. It ended at 24 cents. And that brings us to the very last part of this podcast, the portfolio. And the portfolio did okay last week, but not as good as I hoped. The good thing was NEO. NEO went very well. I think it was traded above $55 at some point, ending the week at 50.4. Still up more than 10% the week overall. And I believe we'll see more from NEO. Good gains ahead. The stocks that did not do as well was, of course, the penny stocks, Diffusion Pharmaceuticals, which is a company I really believe in, managed to push yet another boring news. The test results came in, but they were not significant enough. If you're very interested, Diffusion Pharmaceuticals is all about oxygen transport in the blood. And that was one of the critical points in COVID. I believe it still is, but I'm not sure if it will manage to get into the mainstream treatment of COVID, which was my great belief many months ago when I bought Diffusion Pharmaceuticals at 44 cents. I even bought more at 50. And I made so good money on Diffusion Pharmaceuticals, but for months and months now, it's been just dead boring. And if you look at the other penny stock, Zoom, we will see somewhat the same. Zoom ending last week at 78 cents, being down from well above 80. But I still believe that we will see these small penny stocks go upwards, but as usually, they can fall quite much in a single day. That's the name of the penny stock game. Looking at NEO, as I mentioned, did very well last week. Petro Geoservice, this Norwegian geoservice working in the oil industry in Norway, had not the best week, was down from just above 5 Norwegian kroner and ending the week at 4.76. Right now, it's trading upwards again. But as I said many times before, I believe this stock will do very well. And I'm already quite far up in the green when it comes to Petro Geoservice. Arbutus, not the best week, ending at 295. Ur Energy, a little bit more interesting stock. It's been falling from 170 down to 137. Fell a little bit more than I expected, but for those who remember, we took Ur Energy into the portfolio when it was 98 cents. So we are still far up on the profit when it comes to Ur Energy. Actually, it's 40% up, 39.79 if you want to be totally exact. Trading at 137, as I said. And if you look at the chart, you'll see that the relative strength index is starting to get low. And I see this as a total natural correction after the upturn. I believe that it might turn here, it might go down to 135, but that it will continue to push upwards. And I believe there will be much more to come from Ur Energy. So I like to stay where I am right now. The one thing I also said, that if it goes into one of these frantic rally, it has rallied before, where it suddenly starts to go 40, 50, 50, 60, 70, 80% in a day, I might just sell, because then it will move too fast. As long as it moves right now, steady but slow, I like. Velocity Energy, that lottery ticket in the portfolio, is just dead. A few shares trading now and then at 4 cents. But we are in the territory. Nasdaq is heading towards 15,000, where things should start again. I believe could be this week. Hard to say, but we will see Velocity Energy again start to trade a lot, and it will move upwards. The last stock to mention this time is Tencent Music, ending 15.13 last week, and Tencent still do not manage to pick up traction. But I think it's just a matter of time. It's highly undervalued when it comes to fundamental news. This is a stock that makes very good money, trading at low price earning ratio, in my opinion. Of course, China, you never know about China. That's the one wild card, and that's the one card that's holding the stock down right now. The last stock to mention is, of course, Okugen, the very last stock that we took into the portfolio. Okugen ended last week at $7.29. It was not the best week for Okugen. It was traded above 8. the week before. But I believe we will see UK again up at 10, 12, maybe even up as 15. It's just a matter of time. UK again is highly volatile, so big changes occur more or less every week in either direction. That was all for today, for this podcast. I really hope that you will have a green week, that you manage to pick up on some of my trading tips, especially support and resistance. Dig into it, love it, like to learn how to use it, because that is where you will save for sure a lot of money and maybe even gain some, especially if you manage to find these stocks with little resistance above that are heading for a rally. That part you want to combine with increasing volume. That will be my very last tip. We will speak in 1 week. Bye.
That's the end of this video. Thanks for watching. Leave a comment if you have any questions, and don't forget to subscribe to the channel.